All eyes will be on tech titan Cisco Systems when it reports earnings this week. Cisco has been working towards a recovery thanks to CEO John Chambers' efforts to cut costs and re-examine the company's focus. Tech reporter James Rogers says thanks to restructuring efforts, Cisco is out of the woods.
This has been a very, very difficult time for Cisco. Like this time last year, it was a company that was in a lot of trouble. But, you know, it's through that period now. I was out in Silicon Valley earlier this year talking to Rob Lloyd, the company's Vice President of Worldwide Operations. He said the restructuring's done, everything's over, and there's some key things to take away from that. The company's gross margins, which are absolutely key, are stabilised, and now it can concentrate on trying to take market share away from its competitors.
As 4G LTE wireless infrastructure continues to be expanded ahead of the expected launch of Apple's newest iPhone this fall, Cisco stands to benefit from the build-out.
This is a big year for telecom networks. You know, we're going to see some big devices coming, most notably the iPhone 5 from Apple, which we're expecting sometime in the October timeframe. But, you know, service providers are going to have to prepare for that. They're going to have to build out their core network infrastructure. And I think that's going to be big for Cisco. You know, it's going to help their switching business. It's going to help their routing business. We've already seen Alcatel talk about it boosting IP routing recently. So I think these things are going to be key. And I think we're going to see the first indication of that during the company's third quarter.
Cisco shares climbed 60% between August and March, but gave back some gains on global economic worries and rising competition. The market is betting on an improvement in earnings per share over the previous year, but what are investors' real perceptions of the stock?
Investors are really going to have to start changing the perceptions of Cisco. This was a high growth stock back in the day. It had phenomenal growth. Those days are over. That period is done. But it is a stable company now. You know, it's generating decent growth. And, you know, it's tapped into these things like enterprise networks, service provider networks that we've already talked about. It pays a dividend. So this is a different type of firm now, but it's one that's still worthy of investors' attention.
Cisco reports third quarter results after the close on Wednesday.